We are so glad to have you here along with our guests from the Montgomery County Appraisal District. And I'm Mike Miller with Windsor Lake. I would like to welcome you here. I'm on the board and we appreciate you taking your time this Saturday morning. Our big thanks to Diane and Belton for helping one more time organize a joint effort between us, being able to joint host this, but with their connections and our facility, it's been wonderful. So we appreciate very much you inviting us again. A couple of things, if you're new and our resident, if you need the restroom facilities are down the hall, almost to the fitness center to your left. Also, refreshments are over here and available. And then if you haven't had an opportunity to sign up, sign in when you came in, if you would do us the favor of signing on one of the boards, it'll be back over the table. Thank you all for coming. We look forward to the meeting. And Diane, I'll turn this over to you.
Thank you, Mike. I got a call 2 weeks ago yesterday from our county judge, Mark Keogh, and he said, Diane, we have set up some property tax informational sessions. Would you organize one for Windsor Hills, where we live, and Windsor Lakes? And I said, oh, okay. When do you want to do this? April 23rd. Oh, okay, that's in 2 weeks. Our newsletter's already gone out, so we've got to get this organized. So here we are, and I'm just overwhelmed by the size of our audience. This is just fantastic, and we really appreciate you coming here. Calvin Overstreet, who is the HOA board for Windsor Hills, was sorry he couldn't be here today. And also Bruce Tuff, who's the chair of the Appraisal District Board, had planned to be here, but the Don Stockton Junior High School was being dedicated this morning. He's a former CISD trustee and he wanted to be there, and he was going to run by here, but the others in Conroe, I said, Bruce, you haven't figured out how to clone yourself, so don't worry about that. So our speakers today are Tony Belanowski, who I just met today. He is the Montgomery Central Appraisal District Chief Appraiser, and he has brought some of his staff. And then we also have our Montgomery County Tax Assessor Collector, Tammy McRae, and her Deputy Chief, Kim. So they will be making presentations today and answering your questions. And let's see if I have anything else I want to say. I don't. So again, thank you for being here, and let's get started.
Thank you so much. Before we do anything else, whenever there's a flag, I like to show respect. So if y'all don't mind, could you please stand up and let's do the Pledge of Allegiance? There you go. I'll pledge allegiance
To the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
All right, thank you so much. Thank you, Miss Diane, for that lovely welcome. My name is Janet Jennings Doyle, and I work for the Montgomery Central Appraisal District, and I have been working endlessly with our tax assessor and our deputy, and Tammy McRae and her deputy. We call ourselves the Property Workshop Tour Gang, because we've been all over Montgomery County. We've been north, we've been south, we've been east, we've been west. And today, as I would say that out of all those visits, this is the most pleasurable one. I mean, you have a stage, you have everything set up. And Mike Miller, thank you so much. All I did was walked in, handle my stuff, and Mike did the rest. And thank you so much. You don't know how that makes us feel. And I just want to say thank you so much for having us. You know, when we were setting these things up, you know, we really just wanted to, you know, get the word out to the residents and let them know exactly what's going on with these rising market trends and how it's affecting our values and what of our rights our property owners are. And Tammy McRae would come up and talk to you about how these tax rates are calculated and what you can do and what your rights are as a taxpayer in terms of how you can get involved in those processes. So I just want to say thank you so much. And it is very refreshing that you all get to see us in a different light, right? You don't get to come to our edges on and we holding our professional license over our head and we think it's really not. And we just, you know, and you get to see us in a different light and we get to see you because you remind us why we do what we do. And we're working with real human beings and we're working with people with real issues. And it really just refreshing. So thank y'all so much for having us here this morning. You can know it's always been at night. Okay, so the way the flow is going to work, our chief appraiser, Tony Belanoski, is going to come up first. And he's going to talk to you. He's going to explain to you some important things that you need to know. And we're going to hold our questions. And we're going to let Ms. McRae come up and she's going to talk to you about her presentation about the tax rates and things and how that works. And once they're both are done, then guess what? The real show begins because it becomes your time. And we're going to have Q&A, and the way that's going to go, they have their mics. I'm going to come out. Whoever raises a hand with a question, I'm going to run to you. You ask these questions and they will answer them. And we also have 2 members from the Appraisal District. Tim and Amanda, can you say hi, please? They are there as well. And they're there to answer any individual questions that you may have. Because again, you know, this is your time. And we wanted to make sure that we came so that we can basically let you know that we are here for you. Okay. And so without further ado, are y'all ready to get started? All right, well, let's do it. Mr. Tony Belanoski. Oh, I'm sorry. Our board of directors, you want to announce him? Let Miss Diane do it.
Thank you. Oh, you're on a roll. I hate to, but Bruce Tuff was able to be here. So we're excited about that. And well, I'll let her, because yeah. Thank you, Bruce.
All right, so we do have our board here by surprise. Miss Diane, you knew he would come and we didn't know. So, so that's the way he does, he's sneaking up on us. But anyway, glad for him to see us doing such a good job in educating our community. Mr. Bruce, would you want to say a few words? Okay.
Is the program kicking off now? Okay, great. All right, well, thank you for holding this. This is great. And so, you know, we got noted. Let me just introduce myself. I'm Bruce Tuff. I serve as chairman of the Montgomery Central Appraisal District. So that is that entity that you get the notices from concerning your appraised valuation. I am appointed or elected by the taxing jurisdictions. So a little bit about my past history. I've served as chairman of the Woodlands Township, served president of the Woodlands Community Association, school board trustee for several years. In fact, I thought I had to go to a school dedication for Don Stockton, who is a long-term superintendent. He's going to have it. I thought it was at 10, but it's at 2. So I was able to come, and I'm very glad I could. So out of those taxing jurisdictions, they elect our appraisal review board, our appraisal district board members. And we are not the appraisal review members that you see when you come and do your protest. So if you're coming to do your protest, you'll meet one of the individuals, the employees that work for the Montgomery Central Appraisal District, talk about that. And Tony Belanoski, who's our chief appraiser, is going to talk to you about the process and the procedure and everything else. But the appraisal review board members are independently appointed by a district administrative judge, so a court judge. And I got to tell you, I've been on this board just for, when I first got on the board, it's a very, it's an unforgiving, thankless position. Let me just put it that way. So it looks like the people that are elected on the board are people that have served in elected office before, like myself. I used to have 3 commissioners that served on the Central Appraisal District Board, and they all resigned just because things got kind of crazy. They felt like there was a conflict. They didn't want the public scrutiny of sitting on the Appraisal Review Board and also being a commissioner for the county, and it just created a lot of concerns for them. The last 2 members we had, one did not get reelected and one resigned. So it's really, not a, if anyone's interested, please apply. Okay. So, but I want to just, I'm going to make this over the term that I've served, which I think is now 5 years. And then I was elected chairman after, I think, a couple of years that I served. So I was like, oh my, I missed the meeting. And then I got elected chairman. So, but over that period of time, the law has completely evolved. We used to have a lot of control and authority. You would think that the Montgomery Central Board of Directors has control over the ARB members, has control over your evaluations. If you have a problem, like my neighbor came up to me and said, hey, Bruce, I had a problem. My land value just tripled and my home value increased by 20%. And I know you're the chairman of the Montgomery Central Appraisal District Board. What do I do about this? And I go, Will, you will not believe this, but the legislature said, I can't talk to you about your valuation of your property. And if I do, it's a misdemeanor offense. That's the legislature. So there's this, and I'm going to speak out of turn, but what I've seen happen is the legislature in Austin starts out saying, we're going to fix all this valuation and all the property taxes, and we're going to do all this, but the reverse happens. It's like, okay, we didn't fix it, but we're going to restrict the Montgomery Central Appraisal District Board and the rest of the board. So I can't talk to you about your valuation. I can't fix it. I can't talk to Tony and say, hey, Tony, my neighbor's valuation is way high. You need to fix that. I can't do any of that. I can't appoint an ARB member. I can't appoint one and say, you do a bad job, you do a good job. I just want good ones. That's through the district court judge. The only thing I can do is hire and fire the chief appraiser right here, which is a good thing. And I can set the budget, make sure we have a good working office, and several other administrative tasks. So it's a primarily administrative role and administrative function. So when events like this occur, so I'll just take you back a few years. So when COVID hit, there was a huge outcry. It was like, oh, our properties are crashing. We'll never sell our home. We're losing our values. We need a whole reevaluation of all our properties. Let's reevaluate everything. I called Tony up. I said, Tony, what are we going to do? Can we reevaluate all the properties because COVID's here and we're all going to die. Everything's going down. It's crashing. He goes, no, we can't do it by law. Can't do it by legislative law. And this is the craziest thing. I actually read comments by legislatures in Montgomery County and other counties saying, we need to reevaluate all the properties. We need to get tax relief. We need to save our taxpayers. I go, what the hell? That's what you guys are supposed to do, and you haven't done it. So it's kind of a, but so that, if you'll remember, everybody was concerned. We were concerned about our property values going down, but they're valued on January 1st of every year. That's the value, whatever it is. Can't fix it, can't change it, can't do anything more about it. So I'm going to steal a little bit of thunder for Tony and on his presentation, but I want to tell you, this thing caught us, but we knew it was coming because if any of you have put your house up for sale, or you have friends or family that are buying a house or selling a house, your values are up, man. You don't stay on the market very long, especially around here. These are hot properties and they will go over the sales price. My daughter was looking for a home and we went to it was just the first opening on the weekend. And I talked to the realtor and the homeowner was there. And I said, wow, it's a really nice house, and got the listing price. And she goes, yeah, I've received 19 offers and they were all above the listing price. So we bid like say 5,000 over, it went 20,000 over. That's just tell you what's going on. So all our property values are going up. We did a valuation that we submit to the state controller, Glenn Hagar. And Glenn Hagar has all the sales data for the whole state, more than we have. We're somewhat restricted on ours, but he has all the sales data. And we sent our valuation in. He said, no, you're too low. You undervalued the appraisals in Montgomery County. We're actually doing everybody a favor, but we got slapped. We had to come back, had to do a reevaluation that fit within the state's guidelines. So it kind of gives you a really good understanding of what we do and what's going on. But the more particulars about it, Tony will present to you, and we'll get more information about that. But what I would encourage you to do, a lot of us are aged out 65, so we're capped out at our valuation. So it's really not going to have the huge impact. But for my dad's property, I would always protest, because if you just let it go up and up and up and up, someone's going to pay that price someday. Now, sometimes it's good to have that high basis for your property, because on the date of death value, that's your basis. So the resale, if it even goes up a little bit more, you're not going to pay any taxes, but yours is all tax exempt. But that's just, but I would encourage everybody to protest. If you feel like your value is inappropriate, too high, raised too fast, please come into the office, please protest. We have experienced an unprecedented amount of phone calls in the thousands, 2,578 phone calls. Our capabilities and our staffing cannot support that kind of call volume. We're looking at enhancing our telephone system. We've got a temporary staffing agency we just engaged to try to get more employees to come in. One thing is another revelation. We realized we've underpaid our employees in the Montgomery Central Appraisal District for many years. We did a salary and benefit study, and that's a result of losing employees and going, something's not right. So we figured out we're underpaying our employees. So a lot of our employees have left to go to Harris County. So we're trying to correct that as well. There's a number of factors that are coming in. So what I would do is ask you all to be patient, follow the information we're going to give you today. And if you have any concerns or issues and someone's not taking care of you, you can let me know. But here's the dude right here. So you're going to hear from him. He is our chief appraiser, and you can bring your concerns to him. We have a district liaison officer named Rick Metz, who you'll love. He's worked in the district he's retired, but knows the ins and outs of all the process and procedure. I have not had one person tell me they're not satisfied with Rick Metz. So that's your guy, Rick Metz, and he'll help you. Yes. METTS, Rick, R-I-C-K. I don't have his phone number handy. I should. I think I do have it in here, but we'll give you his cell phone. He'll love that. Okay. Well, thank you today. I really appreciate the opportunity to speak with everyone. I'm really happy it's a full house. I'm glad everybody's here. So continue to be engaged in the community, and thank you for attending today.
Very much, Bruce. I like to walk around when I talk, so now I'm leashed in a little bit. So. But good morning. Thank you very much for coming today. I am Tony Belowski, the Chief Appraiser of the Appraisal District. I've been there as of October for 21 years. It's been a very rewarding career. I'm born and raised in Willis, Texas. So a lifelong resident of Montgomery County. I'd like to thank Bruce for being here. We all didn't know he was coming until today. But we are going to go hopefully give you some information that'll hopefully explain what has happened with valuations here in Montgomery County. To hopefully ease some minds and ease the shock of what's we just sent out here at the Appraisal District. How the property tax system works. The property tax system for local property owners really is a four-legged system. The one that's not included up here is the legislature, and we'll cover some of that here a little bit later. But these are the three main parts local to Montgomery County. First, you have the Appraisal District. Our sole job is to set the market value of all properties within Montgomery County. We have approximately 330 to 350,000 accounts that we evaluate currently, and that number grows by about 6,000 to 9,000 accounts per year. The second part is the Appraisal Review Board, which Bruce did discuss a little bit. They are an independent body, independent from the Appraisal District. Their job is to hear property value disputes, appeals. If you can't agree with evaluation with the Appraisal District, you go before this independent panel. They are appointed by the Administrative District Judge of Montgomery County. They're not appointed by, like Bruce said, the Board of Directors, our staff. They're normal taxpayers like you that sign up for a very thankless job to hear appeals. The last portion is the local taxing units. And the local taxing units have a very important role in your ultimate tax bill. They set tax rates and determine exemption amounts, local optional exemption amounts, which we will cover that in great detail later on. Section 2301 of the Texas Property Tax Code, set by the Texas legislature, tells appraisal districts we're to appraise properties at 100% of market value as of January 1st of every year. That's why you get your invitation every year from the appraisal district. We just mailed out 272,000 of them. And we still have more to go. Yes. I'm sorry I didn't introduce. This is Sherry Hunter. She is one of my deputy chief appraisers. That's why I was pointing at her earlier. Market value is defined. This is the very truncated version of what's in the tax code. The actual definition in the tax code is about a half a page. It's basically what would that property sell for as of January 1st with a willing buyer and a willing seller. One thing that changed this year on your notice of appraised value. Appraisal districts were allowed by the legislature to remove the estimate of taxes off of the notice of appraised value. They did this for basically two reasons. Appraisal districts do not do taxes. We do value. Our job is to establish market value. Your actual taxes are determined by your local taxing units through exemption amounts and setting tax rates. In lieu of that estimate of taxes, you'll receive a nice little postcard, usually late July, early August, that tells you you can go to a website. It's called the Property Tax Database. We call it the TNT site. It's called mocotaxes.org, where you can go and search your property and see the impact of all the different tax rates that Ms. McCrae will be talking about here in a little bit. The 15 of them that they set now. This is why most everybody's here. Property values in Montgomery County rate all over the state, rising at historic rates. Almost every piece of data that you're going to see here is not appraisal district data. These are sources: Texas A&M Real Estate Research Center, Houston Association of Realtors, Rocket Mortgage, and a couple other sites. These are other sources just supporting to show that it's not just the appraisal district showing values are going up. January 2022, and I remind you, January 1 is our appraisal date. Median listing pricing in Montgomery County is up 12.62% versus the previous year. Median price per square foot up almost 20%. Days on market And active listing count, down 11% and 22%. That means the amount of time something's sitting on the market has reduced. And the active number of listings, which will go into something we're about to discuss, how many houses are there available out there? And the new listing count and pending listing counts. Average sales price in properties in Montgomery County from the Texas A&M Real Estate Research Center from 2020 to 2021. These are all sales that occurred during 2020 and all sales that occurred during 2021. Has increased from $339 to $394. The median home price increased from $276 to $315. This right here is what is driving a lot of what's going on, not just in Montgomery County, but across the state of Texas. Available home inventory is defined as the amount of homes available on the market. How many months of inventory is there? A stable market where a buyer or a seller is in no position as an advantage is 6.5 months. As of January 2022, the available home inventory in Montgomery County was at 1.3 months, well below what is considered a stable market. What this does is a big aspect of supply and demand, and Bruce mentioned it earlier. Available home inventory is down. Demand is very, very high. I think Senator Creighton was at our very first workshop 2 weeks ago, Monday, 2 weeks ago. He said during 2021, 304,000 people moved to Montgomery County from just one other, to Texas. Sorry, to Texas. Sorry, to Texas from one other state in the United States. I wasn't going to say it, but it's California. But that's just the one state. There was 48 other states that we have people coming to Texas. People want to live in Texas, and I can understand why. And they really want to live in Montgomery County. So when you have very low available home inventory and a very high demand, prices of homes have went up dramatically. This was pulled as of March of 2022 just to see where we were sitting. This is from Rocket Homes or Rocket Mortgage. That shows as of March, we were still well into a seller's market. What drives a seller's market? Low home inventory, very high demand. Sellers are getting the prices they're asking and even more. We're not the only ones. Like I said, it's not just Montgomery County, it's across the state of Texas. We pulled some data from what we call sister counties, which are similar to us, adjacent to a major metropolitan area, going through a fast boom and growth. Harris County presented 21% average increase in all residential properties across Harris County. Grimes County, 33%. Waller County, 18%. Fort Bend County, which is one of the counties we consider a sister county. Similar size, similar locations, similar boom and growth at 31%. So it's not just Montgomery County. Williamson County, another sister county, similar size, adjacent to Travis County or Austin. For 2021 to 2022, they saw a 52% increase in total market value in Williamson County. Montgomery County, as of preliminary valuations, was between a 36 to 37% increase in total market value across the county. So it's not just Montgomery County, it is across the state. It's the same in Grimes County, it's the same thing. People are moving in. They want to be in Texas. This slide is here. Appraisal District's responsible for appraising every single property, taxable property within the confines of Montgomery County. This is one of my, I think, the most telling slides of what's going on in Montgomery County. In 2011, 55% of the properties that sold in 2011 were priced between $0 and $200,000. 36% were priced from $200,000 to $500,000. Fast forward 10 years to 2021. Only just under 10% of the properties that sold within Montgomery County sold for $200,000 or less. 70% of the homes sold between $200,000 and $500,000. The new starter home in Montgomery County, if you want to call it a starter home, is $250,000. The days of having property values under $200,000 are dwindling away. Wallet investors, this is a forecast, which this was done before what we're all seeing right now, interest rates starting to go up. They were forecasting as median listing prices in Montgomery County. We'll see how that changes with interest rates changing, inflation, it could change. While I'm mentioning that interest rate changes and inflation, our appraisals are January 1st. Something happens after that date that affects the market, we cannot take it into account until January 1st of the next year. As Bruce mentioned, when COVID hit, February, March of 2020, we had just set our valuations for 2020. Everybody thought COVID was going to kill the real estate market. We thought it was too. There was nothing we could do. We wanted to, believe me, we talked, the legislators, Tammy and I, everybody we could talk to, we have to follow the tax code as of January 1st. Well, fast forward 3 months, June of 2020, the market didn't do what everyone expected. It started to explode. Properties on the market selling like hotcakes. Average single family sales price up 13%, median 19%. Overall properties, vacant land, commercial, everything involved up 25.5%. This is just the source data, the websites that a lot of this information came from. You can actually get to this information on the Appraisal District's website. We have a resources tab and there's a market data. It has a copy of the slideshow, a video of our presentation that we made in East Montgomery County. The support data that backs up each one of these slides are all out there. Press releases, press release from the Texas Association of Appraisal Districts that they blasted out to every single legislator in the state of Texas. What does this mean for homeowners? Just remember, supply and demand has driven our market, so our market values are up across the state, across Montgomery County. This is of appraised values. Majority of them were mailed April 5th, $272,000, 272,000 of them. The protest deadline or appeal deadline for any notice mailed on that date is May 16th. It's typically May 15th, but since it falls on a Sunday, it automatically defaults to the next business day. So the appeal deadline is May 16th. We added this slide in after our very first presentation as we got questions concerning the notice of appraised value. We are required by law to give a land value and an improvement value. I'm sure everyone here has had a fee appraisal, an independent fee appraisal done for a refinance, buying a home, or selling a home. You will never see one of those appraisals with a land value and an improvement value, unless it's new construction. But most resale homes, you'll never see this. You'll only see this number, total market value of this property. What is the property worth? That's our job. That's what the appraisal district can work on. When you appeal your property value, that's the only number that we can work on. Total appraised value with the homestead limit. If you owned your home January 1 of 2021, so previous year, and had your homestead exemption in place, you're afforded the protection of the 10% homestead cap, which means the portion of your bill, we call it, here it's called the appraised value with homestead limit. We call it the assessed value, can only go up 10%. So in this example, this market value went up from $804 280, I think is what it says, to 934,450. So $130,000 in market value. Assessed value, or the portion of their tax bill is based on before exemptions, went from 715 to 786. That number only went up 71,533. Previous year's number, assessed value times 1.1. Yes, sir.
Homestead exemption. We purchased our home in August of last year and we put in the homestead exemption. I hit the magic number of 65 this year.
Yes, sir.
So from what you said, they can assess my home at more than 10% higher this year.
You bought it August of 2021?
Yes.
Nope. You have to have lived there January 1, 2021
Okay.
to get that 10% cap.
So they raised it 16% and that's okay.
Yeah. It
Oh.
follows market value. Yes, sir.
Okay. Ouch.
Yes, sir. And I'm sorry, I get griped at every session because I'll take a question. We're going to try and hold Q&A till the end, but I get griped at every time. Stock exemptions. Exemptions and tax rates can have a huge impact on your property tax bill. These are just some of the exemptions that are afforded under the Texas Property Tax Code. Please look at your notice of appraised value. If it is your homestead, make sure it has homestead. And I'll flip back. The young lady's taking a picture of the screen. I'm going to flip back real quick. On the bottom line in that box on your notice, it says exemptions. They'll have a HS for homestead, OA for the overage or over 65 exemption, DV for disabled veterans exemptions. There's an acronym for each one of those. Look at your notice of appraised value. And if you don't see homestead, you don't see OA, and you think you qualify for it, go online to our website, or you can come by our office to file for your exemptions. They can dramatically impact your tax bill. Now, if you just recently filed for your exemptions and you don't see it on your notice, we're getting about 5,000 homestead exemptions a month right now. So our exemption staff is actually at our office today, working all day processing homestead exemptions, over 65 exemptions. Yes, ma'am. Now, the homestead cap is 10%. Yes, it's always been 10%. The legislature has worked very hard over the last few years, especially our Montgomery County delegation, to get that number knocked down to either 5 or 3%. Unfortunately, they're outnumbered once they get to this to Austin by legislators from other areas. So please look at your exemptions on your notice to see if your exemptions are on there. One thing I will caution you is our website, by state law, we are not allowed to indicate on the Appraisal District website at any time if an owner is over 65. So if you look on our website and under the exemptions on your account and you don't see an OA, it's because legally we cannot show that on our website. So that's why I'm saying look at your notice of appraised value, because we will list those on every exemption we have on your account on that notice. If you're a disabled veteran, there's two levels of disabled veteran. One is just the standard disabled veteran, but there's also a DVX, 100% disabled veteran. If you have been classified under the Veterans Administration as 100% disabled and unemployable, you can be 100% exempt from property taxes. If you are a surviving spouse is defined as an individual that was age 55 or older when their spouse passed away that qualified for an age 65 or older. So spouse was 65 and their surviving spouse had to be at least 55 years old. They can qualify for exemptions. And then there are other exemptions that are put in place to help those individuals where a spouse has given their life serving our communities or serving our country. Can't stress it enough. Look at your notice of appraised value. Make sure you have all the exemptions that you may qualify for. Go to our website. There is more information on exemptions. There's an application that has exactly what you have to qualify for each one. Homestead cap. This is going back. We kind of cover this several times because it is a question we've gotten a lot. And I've learned over the years, if you use really big numbers, it helps explain it to a lot of individuals. Market value and assessed value last year were $100,000. Market really exploded and your market value went to $1 million. Your assessed value for that year, when your market value was $1 million, your assessed value, your portion your taxes are based on before exemptions, only goes up to $110,000. Unless you add something new, such as a pool, a new extension to your house, a new covered cabana, something to that effect. That's considered new to the appraisal roll, so that doesn't get that cap protection. But that's just to kind of help indicate or show what that 10% cap can do. May 7th is an election day. There are two very important ballot propositions on there affecting property taxes. Proposition 1 does not go into effect, if it passes, does not go into effect until tax year 2023. It is concerning state mandated school district tax rate compression that they put in under House Bill 3 this last legislative session to help individuals that were over 65 or disabled at that time. Proposition 2 would go into effect for this tax year. It is to increase the state mandated homestead exemption for school districts, only school districts, from $25,000 to $40,000. I'm pretty sure that one's going to pass. If it does, your notice of appraised values that we sent you on April 5th have the homestead exemption set at $25,000. That was the law in effect as of that date. If this passes on May 5th, 7th, May 8th, we will go into our system, change all the state mandated homestead exemptions to $40,000, recalculate, and then when Ms. McCray sends out most of the tax bills in October, it'll be based on that $40,000 homestead exemption. So if and when this passes May 7th, there's nothing the property owner will need to do to get the benefit of that. We will automatically do that at the appraisal district. What are your choices? You've looked at your market value, you still don't agree, or you just want some information to come in and talk to an appraiser and look at the information. File your state law. One thing we wish we could do is we send you the sales information that we utilize to appraise your properties. State law was changed several legislative sessions ago, so sales prices, that sales information confidential. We cannot provide that to anyone unless there is a protest on file. And then we can only give you the sales information that we would have utilized for your property. We can't give you your sister's property. We only your property. So if you file your protest, you can file online using the online protest ID that's on your notice via snail mail or USPS mail and walking into our office. We actually have some quick stop drop boxes at our office. If you don't want to wait in line, you can drop them in there and they will be processed accordingly. If you file online, typically within about 24 hours for most properties, once you file your online protest, you can go back into the online system and it'll have our comparable sales grid there to where you can see how we're determining your value. And our appraisers will look at these appraisals and see if there's any fine tuning that we need to do. Once we get to the appeals process, we get to look at your property more on an individual basis. Before that, we're doing mass appraisal. We're appraising 330 to 350,000 properties, and 200 and something thousand of those are residentials. You decide to come in and meet with an appraiser, which you can schedule an appointment right now online by going to our website to schedule an appointment to come talk to an appraiser informally, and they'll go over everything with you. And if you don't come in early, you wait get the letter that you're scheduled for this date to see the appraisal review board. Even at that time, we have done it for the 20 years I've been at the appraisal district. You will have that opportunity to sit down with an appraiser and go over your valuation before you go to the appraisal review board. Most people that come to our office, a large majority of the people that come to our office, I just ran the numbers for community impact paper 2 days ago. We had 65,000 protests last year. Only 13,000 of those actually had appraisal review board hearings. And a lot of those were by one individual property tax agent firm, the company that you can hire to handle it for you. So most of the people that file protests, either after they look at the data that we have, they withdraw, or they come in and talk to an appraiser. Oh, I'm sorry. Get back to there we are. Most individuals that meet with an appraiser, I don't say they leave happy, but they understand and they agree. And we're able to, a lot of times, making a small adjustment to the property value, and a lot of times we're not, but at least they get the information and can learn and get the knowledge of what's happened with property values. If you don't agree, the next step is going to the appraisal review board, and then they hear your evidence, they hear the appraisal district's evidence, and then they make a decision. So to recap, visit our website. That's the easiest way to file your appeal. File it by May 16th. You have to have your online protest number. You may receive an online through our online system from an appraiser, an online settlement offer where they've been able to adjust value, or they may not have. But you'll at least be able to see the sales engine that we have through the online post problem. If you do it all, agree, you may not have, or you'll receive a letter sometime in the future indicating what date to come. That's our office said. We're getting a lot of phone calls, and we are down 14 staff members out of 100 right now. So we're down pretty substantially in staff members. That's why we have 10 temporary staff members that started this past Monday to try to help us serve the public better. That's pretty much my part. I'll turn it over to Ms. McCray. And
for OA, would you name an exception?
the over 65 exemption, it gives you a dollar amount exemption for most taxing units. And then it also sets a free ceiling, which actually Ms. McCray has in her presentation talking about a free ceiling. So I'll let her go through that as part of her presentation. You can transfer an over 65 exemption from one county to the other. And depending on where you live, if it's a city to a city.
Tammy McRae, and I am your county tax assessor collector. Okay, if everyone would silence your cell phones, please. Before I get started talking about setting the tax rate, this morning, my grandson, one of my grandsons, spent the night with my husband and I, and he's helping his pawpaw right now. When I get through with this, we're going home to mulch. And so as they were leaving, my husband kissed me bye and said, "Good luck." And he said, "I hope you have a really good turnout with your crowd." And because we've been doing this is our 5th one now throughout the county. And my grandson, 6 years old, well, actually just turned 7, out of the mouth of a babe, he says, "Papa, why are you wishing Nana good luck?" And he said, "Well, she's going to talk to people about property taxes." He said, "Oh, Nana, don't lose your." So I thought that was funny, or that. It's all about perspective. So as we've gone out and done these presentations, a lot of people, you're here today because you've received the notice of appraised value. And you're thinking, what does my tax rate or what does the tax office have to do with this process? And most of what I will present to you today is Montgomery County data that your commissioner's court has adopted and set, but it's really important because that determines what comes out of your pocket. So we're going to talk today about the various tax rates, the tax rate calendar, procedures to adopt, and then the statutes and references that govern the tax office and what we do that actually determines what we send to you on your tax notice. So, tax rates. Tax rates are made up of two components, a maintenance and operations rate, which we call M&O, and then there's a debt rate. We call it the INS or debt service rate. The debt service is to pay debt. The legislature says whatever, as long as it meets the definition of debt by the property tax code, a taxing unit can set debt and adopt a tax rate. And there's no limitation. The limitation is it has to qualify, has to be qualifying debt. It's very strict rules to qualify debt. The maintenance and operations portion is where our legislators came in with House Bill 3 and Senate Bill 2. Because I think Tony mentioned earlier, our legislators, our local delegation has fought very hard and filed every session down to 3%. They've also come back and said, okay, well, maybe we can get it at least to 5%. There's 254 counties in the state of Texas. And Senator Brandon Creighton at one of our meetings told us there's approximately 150 counties. While their values are up statewide, people are moving out of some of these other counties. They're moving into like Montgomery County. Within our own state, people are moving out of their counties into our counties. And because of that, our legislators are outnumbered when they get to Austin because these other counties in Texas need that growth to continue to provide the services that they need to provide. So it's a double-edged sword when we talk about that, but just know your legislators have done a great job in trying to lower that appraisal cap. But because they haven't been able to get that passed in Texas, what they have done is they've came back and they have put revenue caps in place. These revenue caps are on the M&O portion, this portion of your tax rate. For a county, a school district, well, let me back up. For a county, city, and several other special jurisdictions, they can only go up 3.5% on the rate. And that is for inflation and that sort of thing. A school district can only go up 2.5%. So our legislators have done what they could since they have been unsuccessful with being able to get the cap passed, which they continue to try to do, but they've limited the growth on a taxing unit can grow your M&O rate. When we get the data from Tony, it's big numbers. But this is just an example of what we do for your individual tax statements. This assessed value, that's after that homestead cap has come into play. This example, it's $125,000. I'm talking right now using county data. The maximum homestead exemption that is statutorily allowed in the state of Texas is 20%. Your commissioner's court has granted 20% homestead exemption to you. So we take that exemption off, 20% of the 125, so we get a taxable value of $100,000. Then we take the tax rate, and like Tony said, we have a whole, I don't know, I think it's like 7 tax rates that we have to calculate for each taxing jurisdiction. But this one is a very important tax rate. This is your 2021 county tax rate. It's not important because it's the county tax rate. It's important because it's the county's no new revenue tax rate. And the no new revenue tax rate we'll talk about just in a minute, but that's important. Don't forget that term. Now, the tax rate times the $100,000 per 100 valuation for the county only in this instance. $408.30. So we're going to talk about, I'm going to show you an example of how these tax rates can make a difference in your tax statement. This is, we're using that same $100 value in 2020. This was the county's no new revenue rate in 2020. And so using that same formula from before, you paid $431.20 in this example. Come along 2021, taxable value went up 5%. So we have taxable value now at $105,000. Tax rate, no new revenue rate. Again, your commissioners adopted that. Look at the difference in these two rates. 412, 4083. Value went up, went down. So your taxable levy went down, 428.72. Not a lot in this example because it's a $100,000 example on, and you'll understand the importance of those. The no new revenue tax rate. What's the definition of a no new revenue tax rate? Well, Senate Bill 2 changed the definition. It used to be called the effective tax rate. It's a benchmark rate, regardless of the name, effective or no new revenue. This rate is to tell you, the voters of Montgomery County, in this instance, that this is a benchmark rate that you can look at. That rate is to generate, should be to generate this approximately the same amount of revenue that was generated last year based on the same properties in both years. That doesn't count. We see construction of new homes and new businesses all the time. That new construction is not calculated in this no new revenue rate. So if you are wanting to make sure that your taxes are not going up with each one of your taxing jurisdictions, you're looking for this rate, no new revenue rate. Any other rate that they adopt above the no new revenue rate is a tax increase. There are 27 steps to calculate the no new revenue tax rate. There's 70 steps to calculate the entire, to get to all of the calculations. We have some adjustments as we go through those 27 steps. This formula is, it's been legislatively been passed. We follow the comptroller's worksheets, which are promulgated by them, but this is all set by your legislature. The next rate that you need to remember is voter approval rate. I don't like this name. I didn't like it when they changed it because it implies that you get to vote on this rate, and you do not get to vote on this rate. This is the maximum rate that a taxing jurisdiction can set without, in some cases, most cases for most jurisdictions, if they adopt a rate that exceeds the voter approval rate, then it has to go to an election where you get to decide. Will you keep and I can't imagine anyone voting to raise a tax rate above the voter approval rate, but there may be a special bond in some cases where it would be necessary. But if they exceed the voter approval rate, you get to come into play and you get to have your voices heard by an automatic election. Remember, I said that we can't restrict the debt service rate, but the 3.5% in the county's case, or 2.5% in a school district, and for most other jurisdictions, it's 3.5%. They get to go up by law up to this voter approval rate if they have to. So what does that mean? In 2020, using that same $105,000 home, this was the county's tax rate, the no new revenue tax rate, $452.76 is what would have come out of your pocket. 2021, keeping the value the same so that you can see how it really affects. Here was the county's no new revenue rate, $428.72. Last year, the Commissioner's Court could have gone up to $4,619, and there's nothing you could have done about it. They would have had a public hearing, but they could have gone up by statute. They could have gone up to $4,619 and you'd have paid $485 just for the county. But you see, they kept it at the 4083. And the reason they did that is because that generated the same amount of revenue as we had in the prior year, the same property. So the tax rate calendar, we receive our value estimates, our preliminary values from the appraisal district we have to receive them by April 30th. We've already got those from Tony. Then, let me go back. Then we get our certified values by July 25th from Tony. That's important because by July 25th, he has to have resolved and be able to, all of the protests, at least be able to certify to our office 95% of the overall county values. We have to, for all taxing jurisdictions, we have to have adopted a proposed tax rate no later than September 1st. I can tell you all of your taxing jurisdictions in here, with the exception of the MUD for Windsor Lakes, is done. They do that by September 1st. August is a good month for you to start watching your taxing jurisdictions. And then we have to adopt our tax rates by September 30th, or at least 60 days after we receive the certified appraisal roll. How many of you are in here from Windsor Hills? Okay. And the rest of you, Windsor Lakes? Okay. Because y'all have different taxing jurisdictions, and I want to be sure and talk about specific information for you. So exemptions are important. Exemptions is what your local governing bodies, your commissioner's court's already given you all they can give you as far as a homestead exemption. They're maxed out. If you live in Windsor Lakes, you're in the city of Conroe, right? City of Conroe right now gives 2.5% homestead exemption. That's not a whole lot of exemption because they can go up to 20%. They will be voting next week, as I understand it, to increase that exemption to 20%. I encourage you to reach out to your city council now before that meeting next week, or either show up at that meeting next week, because that can give you instant property tax relief. If you live in Windsor Hills, you're in the Woodlands Township, they give you 0 homestead exemption. They can give you up to 20%. This is the time that you need to reach out to those taxing jurisdictions. Regardless of which Windsor Hills or Windsor Lakes, you're all in the College District. College District gives 1% homestead exemption. Values are up. This is the year to make that difference. Go to your College District board and those meetings, reach out to them by phone, whatever it takes, and ask them to increase that homestead exemption. All taxing jurisdictions can increase your over 65. The homestead exemption is a percentage. The maximum is 20%. Over 65 and disabled is a flat dollar amount. So reach out to your taxing jurisdictions. They have to set and adopt those resolutions to set those exemptions before July 1st. If you recall, on my other slide, we talked about I received the certified values from the appraisal district on July 25th. If you wait until July 25th, it's too late. The time to do that is right now. And that will have an impact to help bring down your taxes. Values are one thing. You are in control of protesting your taxes. The other part that comes into play, Tony said it was a 4-legged stool. I like to call it a 3-legged stool. Your value, your exemptions, and then your tax rate. That's what determines what you pay, what comes out of your pocket. Of course, our legislators, it all starts with them because they set the laws that we have to follow to get to those values, those exemptions, and those tax rates. So one thing that our legislators, speaking of, did was they said, you have to tell the public what's going on. We do that by publishing notices. taxing jurisdiction, whether it's a MUD, city, county, school, whatever, they have to publish a notice in the newspaper. For your area, those notices are going into the Conroe Courier. It says we have to put it in the paper newspaper. They should also be on the online edition, but we actually have to physically post the newspaper. It's so important that our legislators said all of these notices have to be a quarter-page ad. So it takes up 1/4 of that page of that newspaper. And they went a step further. They said it's even more important that our public see that font has to be really big and bold. So that font, and you're going to see an example of a notice in a minute, it's really large, it's bold, and it stands out from the rest of the items in the newspaper. That right now is when you can affect your value and when you need to have conversations about your exemptions. After July 20th, I will start calculating. I collect for 83 taxing jurisdictions out of approximately 140 that we have countywide. I will be publishing and going to different meetings as we work on these tax rates. County will hold their workshop, their budget workshop, and we will propose a tax rate the first week of August. Other taxing jurisdictions are starting around that same time. That's too late for exemptions, but it's not too late for the tax rate. As I go out, my chief deputy and I go out to a lot of these taxing jurisdictions, and we're presenting their rates to their governing bodies. There's a room full of people like this that show up in Commissioner's Court. And the Commissioner's Court, remember, I've told you 3 years in a row, they've adopted the no new revenue tax rate. They've given you the maximum homestead exemption. They're really a good role model of what a taxing jurisdiction should be like. Our legislators use the county as an example as they go out and they're talking, because they are doing what they're supposed to do. When values go up, rates should come down. If your taxing jurisdiction is adopting the exact same rate that it adopted last year, that is a tax increase. That is not saving you money. Your tax bill will be more. So, as what I was going to say, let me get back to the other taxing jurisdictions. I never see a member of the public at any other taxing jurisdiction meeting as we go out and they're adopting their tax rates. But there's a room full like this at Commissioner's Court. Commissioner's Court is doing all they can do at this point under the statutory requirements. Woodlands Township, City of Conroe, MUDs. I think your MUD here has the maximum homestead exemption. College District, your hospital district has given you the maximum homestead exemption. But these other taxing jurisdictions, even though they're giving you the maximum exemptions that they might can offer, make sure they're adopting the lowest rate that they can adopt as well. And I can tell you they're not. So these notices that I have to publish, if the rate is going up above the lower of the no new revenue or the voter approval rate, there's a special notice that has to be published. And of course, it's a quarter page. It has to be published in the newspaper at least 5 days before they can hold their public hearing. It also has to be published on each one of their taxing jurisdictions' website on the home page. So if you went to the county, you could see it on my site, but if you went to the Montgomery County homepage, you'll see it on that front page. They have to do that at your school district. Y'all are all in Conroe ISD, so they have to. Conroe ISD does it. Woodlands Township does it, City of Conroe. Every taxing jurisdiction has to publish that notice on their website at least 5 days before they can hold their public meeting. In addition to that, Tony mentioned mocotaxes.org. That's a great that's a database. Don't forget that, because that's where you can go and you can look at your individual account. And as these taxing jurisdictions begin to propose their tax rate, they have to propose a tax rate first. And then that's what I put in the newspaper. And that's kind of a red flag for you as a taxpayer. Hey, here's the County Commissioner's Court. Or, hey, here's Conroe ISD. They're getting ready to publish hold their public hearing to adopt their tax rate. That's what MoCo Taxes, MoCo taxes.org. And so As they start proposing their tax rates, we will start posting those onto that database. So you may not see, you'll see the county probably go up first because we're generally the first one to propose a tax rate within all of the jurisdictions. Then you'll see the hospital. And as each jurisdiction is proposing the rates, we add those to that database. So you may have to visit it several times before you see all of them on there. If the notice, on the other notice, if the proposed rate is the calculated no new revenue rate or lower, they don't even have to hold a public hearing. We still have to publish that quarter page notice in the newspaper with that really large font, bold font, but they can just move on to adopt a tax rate within 5 days after posting that notice. But I can tell you, your commissioner's court, they hold a public hearing, even though they're adopting the no new revenue rate, and by statute, they're not required to hold a public hearing. They hold one anyway because they feel like it's important that you, the taxpayer, gets to make public comment on what they're about to do. This is important for those people that are proposing a tax rate for those jurisdictions that go above that no new revenue rate. That's what it will say, notice of proposed tax increase. The newspaper's full of them during the month of August and September. I publish most of our notices that get published for our taxing jurisdictions of the 83 say that. This is the county's notice from last year. It just says notice of meeting to vote on tax rate because they were not proposing a tax increase. They were proposing to vote on the no new revenue rate. So look for this. These are your taxing jurisdictions that are really not increasing your taxes. So we've already talked about that all notices have to be published on the taxing unit's website. In this database, I also have to publish my worksheets. There are 27 steps in calculating the no new revenue rate, get that approval rate. So all those, all of the public hearing dates and times are posted out there. That website will contain a lot of information as it pertains to your individual property. During the tax rate calculation process, we live in Chapter 26 of the Property Tax Code. That's what tells us what we have to do. For the MUDs, we are in the Water Code, and then, of course, the Property Tax Assistance Division of the Comptroller's Office. They promulgate all the forms that we have to follow. And oddly enough, this process is called TNT. It stands for Truth in Taxation, but it's always really, really explosive. Had to share that. Okay, so let's talk about seen Tony's slides, and like I said, my slides are predominantly for the county because it's easy to take one taxing jurisdiction as an example and follow it all the way through the process. You've seen, this is from 2005 to 2021. You see how this is what our values have done. We get right here in 2016, you see it's up. In fact, it's up quite a bit. Then look at 2017. 2017 is when your commissioners gave you that 20% homestead. Do you think it hurt the county in value? It did that year. Look what it's done since. So when your taxing jurisdictions tell you, and I always use this for talking to individuals or to our taxing jurisdictions, they're only going to take a hit 1 year. Values, we're fortunate in Montgomery County that our values do continue to grow. I say that, I know we're paying taxes on that, but there are counties in Texas where that does not apply. Remember, as values go up, rates should be coming down. There was a period of time from 2008 to 13, the county's tax rate stayed the same. And shame on them, that was a tax increase all those years for 5 years. We got new court members that came on board, and it has gone down since. I wanted to have a 10-year look back for you, but I couldn't because we just have preliminary values. So I have a 9-year look back. County values have gone up over 18% the last 9 years. The tax rate has gone down 15.8%. So it has almost gone down at the rate that the values have gone up. And that's what you should be seeing from all of your taxing jurisdictions. I had to throw this in there for a little humor. If I find happiness in my own backyard, will it increase my property taxes? Well, if that happiness is in a hammock or, you know, in your flower bed, no, it's not gonna, your taxes won't go up. But if you put in a pool or a cabana, yep, that happiness is gonna cost you. So briefly, we're gonna talk about over 65 and disabled tax ceilings. A ceiling can only be granted by a city, a county, a college district, or a school district. And a lot of people confuse this. They're the only jurisdictions that can set a ceiling, but every taxing jurisdiction can grant a homestead, an over 65, and a disabled exemption. So ceiling's one thing, but those exemptions, they can all grant those. So what is a ceiling? Sometimes we call it a freeze. You'll hear our lingo in the property tax industry. We say ceiling or freeze. It's a limitation on the year that you turn 65, your taxes, that sets your ceiling. So if your ceiling was set, let's say for county purposes, at $500 that year, and the values go up like they have this year, your ceiling is set for the county, it's set for the college district, it's set for the school district. And so it doesn't matter what that market value is doing out there. It doesn't even matter about the 10% homestead cap for those taxing jurisdictions that give the ceiling or the freeze. You will not pay more in taxes. If you have a ceiling in place, that ceiling is in place. And it doesn't matter what's on that notice of appraised value for those taxing jurisdictions that can grant that. It does matter for those that cannot grant that cannot grant a ceiling, such as a MUD, the Woodlands Township. I think that the hospital district, and I think, yeah, I don't think anyone's in an ESD here, but it does matter for those because those can tax you on the 10% homestead cap, and then your exemptions come into play. Here, remember I told you I collected for 83 and we have 104 taxing jurisdictions, 140. These are the only jurisdictions that offer a ceiling. All of our school districts, the county, the college, the city of Conroe, and the city of Roman Forest. Those are the only ones that offer it in Montgomery County. And most of our taxing jurisdictions cannot if it's a MUD or a special district. So I'm not going to get into all of this stuff here, but this year, your tax ceiling was set at $1,270, okay? And this is for a school district. We've got a school district tax rate up there. And an example of your value increase, but there was a rate decrease by the school district. The calculated tax for that year on your property may come out to be $1,825.65. But because in this instance, we're talking about a school district, you qualified and your ceiling was set at $1,270. You only pay $1,270. It doesn't matter that the value went up. Didn't affect the rate decrease either. In this example, the value remained the same, rate increased. Same thing. Calculated rate came out to be $1,908, but your ceiling is set at $1,270. You do not pay any more. With this, the value went down and the rate went down, so the calculated amount came out to be $1,260. Your ceiling is set at $1,270, but our legislators say if the calculated rate is lower than the ceiling amount, the taxpayer gets the benefit. So in some cases, you can pay lower on that ceiling amount. And I put this in here. I told you your costume was too scary and they're dressed up as a property tax statement. That's because our property tax statements are coming, y'all. They'll be here in October, right around Halloween. And when you get that notice, it's too late to go do anything about an exemption. It's too late to show up at your taxing jurisdiction and ask them to adopt the no new revenue rate. This is the end of it right here. And then we start over the following January doing the same process. Our hope is that through this workshop that we can educate all of our taxpayers to understand that this is a process. Go protest your values. I encourage you to protest your values. That's one thing you can do. The exemptions is the second thing that you can do. Then those tax rates, you can influence your governing bodies to do something about that. And then to get back to the fourth leg of it, have conversations with your legislators. I can tell you that the appraisal district in my office, we're going to have a meeting with all of our local delegation in Montgomery County to see what we can do further help our taxpayers. What other property tax reform can we help them with? And we've already found some things through these property tax workshops that we know that our legislators can most likely get passed that will help you. But now we're going to open it up for questions. So I appreciate your time.
One thing I want to mention, something I forgot to mention. Just real quick, something I forgot to mention, and something that Tammy reminded me of there at the end. Exemptions. She said when your tax bill comes out, there's nothing you can do as far as your taxing units on getting the exemption amounts they grant changed. But you can, if you see an exemption that's not on there and you've lived in your home for a couple of years, especially homestead, we can go back. If you come and file now, we can go back up to 2 years and put a homestead exemption on your property. So if you don't see those exemptions, make sure you come in. And if you've lived here for a couple of years and don't have it in place, we can go back at least 2 years on a homestead and over 65. And I think it disables persons exemptions. The other thing that we probably will get some questions about, we've gotten it at every workshop, on the notice of appraised value, the line that says improvements. We hate having to use that term on the notice of appraised value, but it's legislatively mandated. Improvements are the structures on the property. It's the house, the pool. It doesn't mean you made improvements. The value may have went up just from following what the market is telling us to do for the value of the improvements. It doesn't mean, or structures, it doesn't mean you made improvements to your property. Because you may have left your home exactly the same as it was last year, but based on what the market is telling us, it is worth more this year than it was last year. We get a lot of questions on that. We wish we could just put building value on there. It'd be a lot simpler to understand, but the tax code says we have to use improvements. Yep, that's all I had.
All right. Okay, I think, is this one on? Here, you try to get that one on. Okay, well, now it's time for Q&A. It's your time, right? Yay. So what we'll do is if you have a question, you can raise your hand and I will come running to you. But I will say, to be fair, if we get too many hands, then I might have to ask you to form a line. That way I don't just skip over someone and go to the next person. I want to be as fair as possible. But we do have two ladies in the back. Our Deputy Sherry Hunter and Amanda are back there with their laptops. If you have specific questions about your particular notice or just to see if your exemption is on your account, they are back there to assist you. But let's have the first hand for the first question. Okay, I saw you first. I'm sorry. All right, here we go.
I know that we have the city of Conroe, Montgomery County, Montgomery Hospital, and Conroe ISD and Lone Star. Does the MUD district increase? Is that included in the county?
She's asking about the MUD district.
MUD is not included with the county, no. Are you in Windsor Lakes?
Yes.
Okay, then you're in MUD 67.
Yeah,
Oh, you're not in the MUD. Okay, you're Windsor Lakes. You do not
Well,
have
that's
a
a
MUD
good thing.
tax.
You don't want that. So don't be looking for that on there.
It's the same that it will be on our, for this year. I mean, the
Entities.
the entities will be the same, like
Yeah.
City of Conroe.
Yes, your taxing
Montgomery.
unit should be the same as last year unless somebody annexed you in. But you would probably know about that by now. But yes, they should be the same taxing units as the
You're welcome.
previous year.
If you do not see a mud tax on your tax bill, praise God, don't be looking for one, okay? All right, who's next?
Okay, can you hear me? Okay. All right, I noticed last year on our appraised value that the land value, regardless of the lot size, was the same throughout our entire neighborhood. And so that's a change in methodology, and I'd like to understand that better. Can you please explain that?
Yes, we do appraisals under mass appraisal. Generally accepted appraisal practices under mass appraisal. Through analysis and talking with other appraisal districts across the state, when a subdivision is initially being built, like I guess when Windsor Lakes and Windsor Hills, which was some time ago, was initially being built, developers and builders will put a premium on a cul-de-sac lot. But as those subdivisions age, that premium kind of tends to go away. You may have a little bit, but it's very small amount. What we see is once a property starts to resell, more people are concerned about value-wise the house. What's in the house? So what we're looking at when we're doing our valuations is what's really driving the value of the property. And what we've seen from our analysis is the lot size, especially in master planned communities, unless they're estate style sections, that the lot size is really not a big driver on the valuation. So what we have started doing across the county now in most master plan communities, other than those estate style sections, to where you can go from a half acre to a 1 acre lot, which is a dramatically difference, is we're starting to readjust our valuations to what what the market is showing us is what's happening on the market. That it's more the real driver of the value, the contributory of the market is the structure itself, and that little difference in size, and sometimes it can be a double the size of a lot, is not really contributing a whole lot of value, extra value to that property. Give you an example, when my wife and I were buying our first home in Conroe, we wanted a nice big lot, the cul-de-sac or the corner. The corner lot was sold out by then, but the cul-de-sac was the premium for the builder, for the developer, for us to have that cul-de-sac lot at that time was only $2,000 more than the normal along the street square lot. I'm glad we didn't buy that one because it was at the bottom of the hill and Harvey it went underwater. So, but that is what we're seeing in the market, and it's happening across the state. Is once a subdivision is developed and they're starting to resell, that difference in lot size is not a huge contributory difference in valuation.
Does that answer your question, ma'am? Okay, good. Here you go, sir.
Thank you. New construction in this county is just going crazy. New houses, new apartment buildings, new businesses of all kinds and shapes, which means increased revenue for you. How is that impacting my tax bill?
The increased revenue, there will be increased revenue, certainly. As we calculate those tax rates, that factors in some of the growth. That's when you need to make sure that you go to your taxing jurisdictions and hold them accountable to that no new revenue rate. They have more revenue. All taxing jurisdictions have a substantial growth this year. Everyone, I think, I don't remember off the top of my head, countywide, the county taxable value was up right at 35%. We'll probably see somewhere between 5 to 6% loss, Tony, right? And but that's still a substantial tax increase as far as value. So hold your taxing jurisdictions accountable to that no new revenue rate. That rate is the rate that limits them on their growth. So I encourage you again to hold all of your taxing jurisdictions accountable. Janet.
All right, next question. I'm sorry. All right, where are we at? Up front? Okay, Here I come. I was trying to direct back there. What's the question? All right. There you go.
Hi, I have a question about the over 65 exemption. When I look on my tax appraisal, I have the homestead and the over 65, but they're not separated. That's one question. Is there a place where I can go to see how much is each one? And the question number two is on the tax ceiling that you did a fine job of explaining, but is there a place on any of either the tax bill or the appraisal that tells me what the value of that tax ceiling is that I can check it against?
It's not indicated on the notice of appraised value, the breakout of the exemption dollar amounts, because most entities taxing units do give a flat dollar amount exemption for the over 65. But if your freeze ceilings, like I said earlier, we can't indicate online if it's an over 65 exemption. But since there are several exemptions that offer a freeze ceiling, if you go to our website and pull up your account and scroll down, there'll be where it lists your taxing units and proposed taxable value. It'll have the tax rates. If you have a freeze ceiling, it'll actually have that freeze ceiling, the whole dollar amounts. It goes like $1,100. It won't say $1,100.05, but you can see what your freeze ceilings are on there on our website. But even those, as we were talking about, that as tax rates change, if the taxable value, your tax levy that after the tax rates change come out below that ceiling, you will pay the lesser of the two.
Okay, does that answer your question, sir? And you
There was another part I think about. On your tax statement itself, sir, I would love to have that information shown there. But unfortunately, every legislative session, you'll notice your tax statement has a whole bunch of information on the front and the back. It's two-sided. Our legislators require us to put more and more and more information on that tax statement because they think it's informational, and it is to some degree, but it's also distracting, and it limits the information that we're able to put on there. You can, unfortunately, you cannot see your ceiling amount spelled out there. It will be the amount that is beside the school district or the county. That is your ceiling, but is there a way for you to see the calculated versus the ceiling? For those for those taxing jurisdictions, the answer is no. You could call the tax office and we can certainly give you that information, but you will not see it on your tax statement.
And also the mocotaxes.org, when that starts happening later in the year, when they start putting proposed rates out there, when you log in and you pull up your property there, it will have an indication that you have a freeze ceiling of such and such dollar amount. So then you'll be able to compare that amount to the proposed rate, the no new revenue rate, and the 5 or 6 other rates that will be out there. So.
Okay, who's next? Okay, I'm coming right back.
I would just like to know if you know how many people, a percentage of population of Montgomery County is over 65.
That's a lot. She wants to know the percentage of over 65 taxpayers in the county. Do we know what percentage?
I do not know the percentage. I
Okay.
do have the numbers and I can calculate the percentage, but I didn't bring that information with me.
Okay,
Um,
okay, all right. Let's go here.
To follow up on the question with the development within the county, are these construction companies or whatever we want to call them, given tax assessments for infrastructure? And are they required to pay anything because of roads and sewers and water and the like such as that? Or is that picked up, you know, I know it's paid every year for some time, but are they adjusted for or taxed for infrastructure improvement?
if it's a you're talking about a subdivision, right? A new subdivision in Montgomery County, for the most part, comes along with the MUD. The developers, the MUDs are created by our legislators. The MUDs sell bonds to pay for the infrastructure within those subdivisions, to pay for if it's a master plan community, if it has a pool, a park. They do sell bonds to pay for all of that. That is their bonds is their debt. That debt rate is one portion of your tax statement. But that is specific to that MUD where where subdivision is being built. It's not passed on countywide. It is specific to an area that is being developed. You must live within that area. Did I answer your question? Okay.
Next.
Hi, Ms. McRae. I moved to Windsor Lakes in June of last year. I was already 66. I applied for the homestead and the over 65 exemption. It was submitted March 17th, but it doesn't show on the appraisal I got on April 5th.
It was submitted March 17th of this year,
Yes.
of 2022. Yeah, we're receiving about 5,000 homestead exemptions daily, or not daily, sorry, monthly. That'd be way too many daily. So we're processing them as fast as we can. When did you file for your homestead? I'm sorry.
March 17th.
March
Online.
17th. We shut our system down about that time to run appraisal notices to get them in the mail by April 5th. We are diligently working. Did you file your homestead online or?
Both online.
Both online.
Homestead and the over 65.
And as we get through the process, you should get a notification that tells you once it's been processed, and then you can go out on a web, or you can check our website and see if it's already been processed. That and
So
that's
you
on there.
won't be issuing another
No,
one of
we
these.
don't issue a new, just like if a taxing unit increases their exemptions, like hopefully the city of Conroe will be here next week, because I live in the city of Conroe and I also have a MUD district. Even when that happens, we don't generate new notices of appraised value.
So the last question was, if you were 66 or above last year when you purchased the home, does that carry over from the prior owner's over 65 exemption or no?
No, it won't carry over from the prior owners, but if you owned a home, another home in Montgomery County or in the state of Texas, you can port, if you had an over 65 exemption on that property, it's called a portability. You can port a portability percentage, a portion of that exemption over from your old property.
Okay, so since that wasn't the case, I'm an out-of-state person.
Yes.
So there won't be any homestead exemption or over 65 exemption for this?
For this year, you will. January 1 of this year, if you live there, you'll get your homestead and over 65 for this year.
On this appraised value?
Yes, it'll be applied to that. Yes.
Okay,
Did you purchase your home in 2021 or 2022?
2021, June of 2021.
He should have received the over
Yeah,
65 exemption.
You can get a over 65 exemption for a portion of that year.
You say you
For
can or
last year.
can't?
You can. You can. So as they are working your exemption, hopefully our clerical, like I said, our entire exemptions crew is at our office today, and they'll be there all day working exemptions. So as they work through those, typically as we see them, as they would have qualified for the previous year, we'll put it in place
So
for
should
you.
you file a protest just to make sure that happens, or what do you do?
If it's just an exemption issue, I really wouldn't. I encourage you to file your protest to protect your rights and remedies for any issue. But I would either come by our office, I'd say call right now, but the amount of phone calls we're getting is come by our office and sit with someone, and they can make sure that you're getting everything that you're afforded via exemptions.
Okay, final question. How do you work with the mortgage company for escrow purposes, or do you send them out? Do they secure them? How does that work?
Okay, well, that's my department now. I want to go back to your over 65 very quickly. So it sounds like you did not have an over 65 exemption in place for 2021. So as that exemption is granted by the appraisal district, when they get to that portion where they actually put it on your account and they'll go back and add it for 2021. You've already paid your 2021 taxes to me. Tony will supplement, his office will supplement that over to my office. And we go in and we adjust that. We add that exemption, even though you have paid your property taxes, and that's an automatic refund that we'll be sending back to you. Okay, as far as mortgage companies, I put data. We have they have third-party vendors that they hire. CoreLogic is the largest one nationwide, and that company will gather for a whole multitude of mortgage companies throughout the nation. And so they send us data, we send them data, and we're posting data out on our website weekly for the mortgage companies, and they go out there and they pull it, download it. So they're looking at the data and they're pulling money from the escrows accordingly based on those taxes. They do not take into account appraised values when they do this. They're looking at tax bills only. So a lot of people are most likely going to be short in their escrow this year, because it depends on how it works out. Bottom line, rates will affect what you pay. Your assessed value is going to affect what you pay, and then those exemptions. So with the percentage increase that we've had in the value, there is some cases where the exemptions and the tax rates you may still have a little increase. It's possible. So the mortgage companies would have to adjust that on the back end. But they're all aware that they know statewide that values are up. So I would imagine that they will be working with their clients.
We've actually had property owners coming in already that they've gotten a notice from their mortgage company of notice of proposed escrow increase based off of proposed value. I don't really agree with that, but it can help some property owners start to prepare for that.
Yes, and just make sure that over 65, we want to make sure, we were saying we'll put it on, but was the home brand new or was you bought it from someone? Okay, was it preoccupied or was it brand new? Okay, so it really depends on what the previous owner had on there as well. So we'll take a look at that and just make sure that you are getting the benefits that you qualify for.
If the previous owner had an over 65, you had the benefit of paying taxes on their over 65 exemption. So it may have already been on there, even though it belonged to someone else. The amount of the over 65 exemption was the same regardless of who the owner is. So you may, if that was the case, then you would not get a refund, and they would not add it because it was already in place for the prior owner.
Just want to make sure we were clear on that. You had your hand up for a while. So even while he was speaking, so we got to give her the floor, y'all. Here we go. You're next.
The longer I wait, the more questions I have. But I think that clarified one. Oh, there, is that better? Okay. We're in a gated community. My understanding is, at least from where I moved from, gated communities are responsible for their roads, for all of that. So does that have an impact on part of our tax bill? Because it should, in theory, reduce our taxes because you don't have to come in and fix our roads.
It does not,
Why not?
because the county sets, and all taxing jurisdictions set one tax rate for all properties. They do not set a tax rate for Windsor Lakes. They do not set a tax rate for Harper's Landing. They set a tax rate for the county or for the school district. It's one rate that applies to all properties. Yes.
That's why Windsor Hills, they put a guardhouse out there, but then once they realized if we gated our community, we would have to maintain our roads, they decided against it. And that's another reason why a lot of us in Windsor Hills, who are part of the Woodlands Township, didn't want to incorporate the Woodlands Township because the county would be maintaining, no, the township would be maintaining our roads, which would be an additional, I mean, that rate would have gone up. Plus our law enforcement people that we are allocated by the county, we would have had to pay for all of it. So incorporation didn't make sense.
So we maintain our roads, so we pay the same length of taxes that.
Yes, we have gated communities all throughout the county.
Unfortunately, it is required by law.
Right.
Unfortunately, we're just the middle guys. Okay.
Seriously, if we have the OA exemption and our taxes are basically frozen, what would help us in protesting the appraisal?
Well, do you live in Windsor Hills or Windsor Lakes?
Windsor Lakes.
Windsor Lakes. So you pay the city of Conroe. Your taxes are in there and your freeze is not going to change. Even if they come back and they grant a 20% homestead, your ceiling is still set at what it was. But every year I'm required by law to recalculate every individual's over 65 account. And even though your ceiling may be set here, if that calculated amount comes out lower, you pay the lower. It can never go above, but you can always pay less. So it does help to protest the value, because not everyone can offer a ceiling or or they may not give you the maximum exemptions, and you're going to pay on that higher value for those taxing jurisdictions.
But would it make a difference in the sale of my home if someone looked at, because I had my value lowered? Would that affect?
No. I can tell you most realtors, if you're going to buy a house and you try to use our valuation to negotiate a value down, most realtors that are working for the seller are gonna laugh. Because majority of the time our valuations, we're close and we get a whole lot of them really, really close. But the majority of the time we're behind the market, especially because we're doing January 1. You're selling your house right now. Based on what we're seeing, the market is still doing this. So no, they're not gonna, protesting your valuation is not gonna help you hurt you when you sell your home, unless you disclose to something to us, such as cracked slabs. Something that really should be disclosed out there, because we do have buyers that send in public information requests and ask for any history of a protest. So if you've disclosed you have a cracked slab, it can hurt your valuation, and it can, the other owners, and once it's disclosed for us, we're going to put it out there. Because we've had people, well, if I tell you I have my cracked slab and show you, are you going to leave it in your system? Like, yes. And if somebody asks for it, we legally have to give it to them. So, but most places, I can tell you 99% of the time, it is not going to hurt your value, your sales price, if you protest your valuation, unless we did make a mistake and we are way overvalued, because then they're going to look at that proposed tax bill, the buyer. So just look at your notice. And if our value is representative, is very close, I think you're fine. If you still feel it's overvalued, protest, at least come in and talk to our appraisers, and they can go through your individual property, because you never know. They may find something we have coded wrong. And we may have you as 3 fireplaces when you only have 1, because that can adjust your value a little bit. So I encourage you to file your protest, at least to see the data that we have, and possibly sit down with an appraiser and go through to make sure everything we have on your account is correct.
And for the most part, we're usually about 15% below what they have out there in the market value anyway. So.
We just purchased our home back in November, and the previous owner had the OA account, the ceilings. Will that ceilings carry over to me, or is it gonna start new on mine?
Unfortunately, no, you don't get to keep the previous owner's ceilings. So your tax bill, those free ceilings will reset on what your tax bill is this year. So that we do see that a lot where property owners come in and they'll buy a home, especially when it's coming to escrow for mortgage purposes at closing. And they've escrowed on the previous owner's over 65 and free ceiling that was put in place 15 years ago. And then all of a sudden, those free ceilings reset at the current taxable value, or your current levy for that year. So yours will reset for 2022.
And won't know what that is at this point in time.
Yeah.
Yeah, there's no way to know. I will not receive certified values until July 25th. And then the process starts for setting the tax rates after that. So you will not know until probably you're in the college district until September.
Thank you.
Did you move from another location in Texas? Okay.
Okay. All right. Coming over.
Hi, my question's actually about HOA-owned property in the county. And I know Harris County sets a nominal value of $100, but I also realize that the tax code allows each appraisal district to decide what that county's nominal value is. And I'm asking specifically about one account, and I've been in contact with your office over this, and this isn't in one of these HOAs, but I work with 18 years, I've worked with a company that manages HOAs. And there's an HOA that has a detention pond, okay, serves purpose to just catch water. The value went from $100 in 2020 to $176,420 in last year, and over $225,000 this year. That's a huge jump. And can I visit with you individually on that?
Absolutely, because
Okay.
we can take a look at that, and if that's a clerical error on our side, we can go back to a previous year and correct that. Because we missed some, like I said, we do make mistakes. So
Well,
if it is
some-
a clerical, we can
Okay.
look at going back to the previous year.